Welcome back to the Stablecoin podcast. This is Luther and Rami, co-founders of the Stablecoin Partners. Our guest today is Luke Giancarlo, director of the FinTech Innovation Lab at Accenture. The program has helped over 120 fintechs raise a combined $3.6 billion by connecting them to the world's largest banks, insurers, and payment giants. Today's conversation is about what it really takes for stablecoins to cross the chasm into enterprise and institutional adoption. Why the hard part isn't the technology, it's changing how the world's biggest financial institutions think, buy, and build. Before we get started, a quick disclaimer. The opinions expressed here are those of the hosts and the guests and do not represent the views of their employers or affiliated organizations. This conversation is for information purposes only and should not be taken as legal, financial, or investment advice. And with that, Luke, it's so lovely to have you on the show, my friend.
Luther, it's great to see you. Thank you again for having me on. Really excited to do this.
Yeah, I know we've been planning this for a long time. Been following everything that you've been doing in this space, especially from the FinTech Innovation Lab. So excited to talk about some of the amazing things that Accenture is doing in this space, being such a huge name. Looking forward to just diving right in. And the best way to dive right in is, how'd you get started?
Yeah, no, it's a fun question. I've been in this space for almost a decade now. Actually helped start what's called the Digital Dollar Project. That's a think tank that actually exists as a consortium of different academics, executives, technologists, fintechs to really help explore and advocate for the tokenization of the US dollar. Started off really focused on central bank digital currency, but we've expanded to actually focus on stablecoins and tokenized deposits as well. And we did that back in 2019. And fast forward to now, I think it's all the rage and it's amazing to see how far we've come, especially in the US. And that was really for me, like the interest in getting into digital currencies and digital assets, talking about that kind of across different industries, different perspectives around what are the impacts, both from economic, financially, technologically as well. So then was at Accenture, part of our what we call tech innovation strategy group. So I really focus on helping large financial institutions understand, like you mentioned, what does it really take to adopt innovation technology? So whether it's digital assets or AI, and now we're starting to talk about quantum, but different topics. And it's really challenging for a very red taped organization to pivot quickly to adopt new technologies. And so we really help them think that through and understand how that fits into their business. And then the last hat that I wear is, as you mentioned, the FinTech Innovation Lab, which is probably the most fun part of my job right now, which represents about 45 financial institutions across payments, banking, capital markets, and insurance. And every year we interview their executives to understand their innovation priorities. We then go out to the market to find top startup companies that are solving those challenges. And then it's normal incubator where the banks become the judges and they vote on the companies they find most interesting. So we get down to about a top 10. But what's unique about the program is those 10 companies then get 3 months of mentorship and engagement from those financial institutions to really help them refine their product. And what's fun about the program is it's exactly like you mentioned, it's bridging that gap between these really radical, innovative startup companies to then these more legacy financial institutions. And they sort of both, reach across the aisle to figure out how to help each other, both from the startups, how to really scale, be more mature, understand what it takes to work with a large enterprise. And from a large financial institution, we're talking about the giants of the industries, right? The BlackRocks, JP Morgans, your old stomping grounds of Bank of America. But how do they actually act more nimbly to work with those startup companies across these different innovation paradigms? So that's a little bit about me, and it's been a fun couple of years.
Where do you see the biggest stumbling blocks, right, when it comes to some of these large institutions and the way that they interact with smaller companies? I'll give you an example. So we were working with a few incubators ourselves at MoneyGram, and quite often what I would see is that large institutions think differently when it comes to talking to a smaller institution, especially a startup perspective. How do you see that interaction, and where exactly do you see some of the friction points?
Yeah, it's a good question. It's like, I think part of it is coming to the table with really clear expectations for what you're both looking for. And what that means, I think from a large organization, sometimes they're looking for innovation theater where they just want to learn and see what's out there that's fun. And for a startup, that could be killer because it wastes your time. You rotate too much. And so at the FinTech Lab, what we're really focused on is really that mentorship. And the down selection really happens by the financial institutions. or the one litmus test is there real traction? Are you interested? Do you want to spend 3 months of your team's time with this startup company?
Mm.
And so by the time you get to the program, you already know that there is a sort of agreed upon expectation on both sides of the relationship, that there's a willingness to work together, that there's some level of interest, and it's sort of the dating before marriage phase that we're really starting to set up. But I think some of like the common pitfalls that we see is from the startup lens. I think often they're trying to push technologies more than they're trying to push actual solution sets. Where they're like, look how fast or how modular, how slick our technology stack is, and they're not really focused on what are we solving for a financial institution. And so I think we often are trying to work with the startup companies to help them understand how to refine your pitch. How are you really taking smart technology and using it in a way that actually solves real problems, and you can communicate that solution set to those financial institutions as well. And on the other side, I think for the financial institutions, I think a lot of times their eyes are bigger than their stomach, in that they're really interested in different innovation technologies. They're talking about quantum and agentic payments and some really far out concepts. And I think they need to have a bit of a sober approach for what is the actual appetite of their organization.
Yeah.
What can they actually reasonably work with in a way that's tangible, productive, both with business and the startup companies.
What does adoption right now look like from a you get the incubator going, you have a cohort, by the way, congratulations on the February cohort, right? And how long does it actually take before you actually start to see where a solution that's generated by the startup gets adopted into the larger finance institution?
Yeah, and thanks. We're really excited about the cohort for this year. We'll announce it publicly in March. I think, Luther, I was giving you the inside scoop on some of the
Uh,
fun companies, and excited to share more about them, but excited to announce it later this month. Um, for us, though, it's we really see this as the beginning of the relationship. And I think the relationship's really the key word for the program as well. What we aim to do is put these really smart out there founders in the room with these financial institutions, and 3 months is just enough time to scratch the
mm,
itch, right? Or to start that relationship. And I think we've all been around enterprise sales. These are long sales cycles. They could take multiple years before they come to close. And what we really solve for is how do you start that relationship, right? How do you get the ball rolling, cover all the initial bases, how to understand what's the requirements around procurement? How does this fit into their broader strategy? What are their expectations around tech integrations? And then for the financial institution, like understanding like just the personal aspect of some of these founders and their teams, and the funding aspect, and where they're trying to take the company as well. And so it gets you through those initial questions in a really rapid forum to do that. And after those 3 months, I think these are ongoing relationships. Like we
yeah.
hope that they stay engaged. And some of like the best stories that I've seen are companies that come out of the lab and 2 years later, they're calling me up saying, "Hey, just want to thank you. We just finally signed with XYZ company." And those are some of the best stories because you can see that they've really built the traction, built the trust. And it's both a win for the startup's maturity, but also for the financial institution. It's such a great proof point in terms of the journey that they've gone on as well, right? Where they had these big guys and were excited about these innovation ideas. And now 2 years later, they're finally at the point where they're actually doing agentic infrastructure or open banking concepts or some of these more radical concepts they're talking about in the market. They're now really doing them 2 years later.
Yep. Luke, one of the places that quite often startups, struggle a little bit is, and I love the way that he expressed it earlier, which is they think about adoption. The first thing that they say is, "Here's our TAM, right? Here's how we're going to go to market. Here's what the technology looks like." But that technology is always geared towards adoption and less about regulation or AML KYC or from that aspect of it. How do you work with the startups in making sure that their narrative around that part is actually super strong? Because any large financial institution cares more about that even before the TAM aspect of it.
Yeah, it's such a good point. And couple things. One, I was talking to a bank yesterday about this, and they were so proud to say, our vendor requirements to go through procurement are so rigorous, and we're probably the hardest and the baddest in the industry. And we're so proud of that because we believe that if you can hit our bar, it's a benefit to the rest of the industry that, if they work with us, they can work with anybody. And I think that's honestly more common than you think, where a lot of these banks are really proud of how rigorous and how high of a bar they're setting in terms of the standards to work with them. And as part of, I think, in their nature as a financial
Yeah.
organization to be risk adverse. And so they're bringing that when they think about having to work with these startup companies. And you're right, that's something that we as a lab are always trying to help them think through as well. And the FinTech Lab gives them an arena, an ability to ask the dumb questions and talk this out and understand in sort of a safe space what those requirements are, how can they build towards that, and really having an open a conversation around what's necessary, what's not, as they think about their addressable market and the requirements of that market as well. The other thing that we do, which is a lot of fun, is we take the cohort down to Washington, D.C. for a couple days every year. And we do the whole alphabet
Oh, wow.
soup going on Capitol Hill. We meet with the OCC, the FRB, FINRA, SEC, CFTC. So it's a rapid fire 2 days where you get really interesting insights from those organizations. I don't think the fintechs always understand they themselves are not regulated as a financial institution, but their clients are. And so
Yeah.
it's important for them to understand what is the sophistication and expectations of those financial institutions, and how can they as a tech company know how to navigate around those or meet that same level and bar that and for the pressure that those financial institutions are under.
Yeah, Luther beat me to asking that question because it was very much a regulated tangent actually that I wanted to go down. Because ultimately, if the banks are going to be the customers, they need regulatory clarity as to the product direction that they're going in. So I think you're based in New York, so obviously that's a more conservative financial ecosystem with NYDFS and so on. But just generally, more federally, Genius only just came out and it's not being clarified yet. So to what extent does that change the maturation cycle of the cohort, the kind of companies that are coming into the cohort, what kind of things they can do? Because sometimes if the barrier to entry is regulatory clarity before a bank's going to do anything, sometimes that means that actually a good product now might not actually be able to be to proliferate within the financial services ecosystem for some time. So how do you manage that? How do you I mean, it's great to hear that you're taking the teams down to Washington, and that's extremely valuable and relevant. But how do you manage the funnel of innovation to sort of meet the timetable of legislation? Or I don't know if there's a better way of mapping it, overlaying it.
Yeah, it's a great question. And it's like actually kind of what I think about often because there's such a timing element to being an entrepreneur, right? It's you want to be ahead of the market, but not too ahead of it. And so there's always this challenge. And you're right, Remy, it's not just from a regulatory perspective of are the regulators ready for you to actually move forward and advance in the market, but also for the financial institutions, kind of like what we talked about, right? But are they comfortable with that as well? And you're seeing that, I think, with the Genius Act, where like it's giving some clarity to the fintechs, but the banks are still warming up to, what does this mean for the business? And there's still some edge cases like, stablecoin yield that's being battled out. That's not quite clear yet. But I think as a fintech, you can still make progress and strides around building that foundation. And as the regulation gets clearer, you're going to move into some of these ancillary areas as well. And we've had, again, I think the success story sometimes is not as immediate as you think. We actually had digital asset come out of our program back in 2018. And now, 2026, I think they are on fire right now with the Canton Network and some of the other work that they're doing. And so I think there's some stories like that where they had some early success. And I'm a big fan of Yuval and the team over there. Did some work in Hong Kong and some other regions. And now we're seeing them kind of have a bit of a renaissance as well with Canton. So I think that's a great story of as the regulation picks up, it kind of comes in these waves for these successes for the founders.
Yeah, that's really interesting. No, thank you for that. And I guess maybe it leads on to another question. You mentioned Hong Kong, looked on the website, and of course, New York, London, Hong Kong as
Yeah.
well. So are you able to give an idea of sort of are there themes or sort of themes that you see from different regions? Are different regions looking at different sort of applications of the same technology? So, is is Hong Kong looking in a different way to stablecoins, for example, to New York and London and Europe? So what are your themes having a global aspect of it?
Yeah, it's such a fascinating like conversation, and we actually track. Maybe next time I'll bring my presentations and we'll do this with some slides. But it's so much fun. We are able to track some of those priorities from the financial institutions in those different regions for like what we're hearing as being both from the financial institutions, like what are their concerns or topics they're interested in, and then what is the startup scene actually building in that area. And so some of the themes, and one just from a more macro perspective, I would say Hong Kong is in the Asia Pacific region is probably the most, I would think, innovative or out there. Like they like to test out these different novel concepts. I would say the European region, based in our London lab, is actually, speak of regulation, a bit more restricted or focused on regulation that actually drives the innovation around that. So things like open banking and interoperability are like big topics right now. And so we're seeing a lot of innovation around companies in that space. In the US, I would argue that it's the most mature companies that we have out of all of our cohorts. We actually think of the New York lab as kind of the graduate school of incubators in general, but definitely of our own programs, where it's working with the biggest, the baddest financial institutions that are based here. So you get a bit more mature companies that are really more in that growth stage. So it's not really the two founders and a dog in a garage that are building something. It's like, 50 people in growth stage coming out of an A round that are really trying to like super drive their business and want to use the lab as a way to scale and get some relationships in the New York scene. So I think that's more macro, just the profile of companies that we get as we see globally from like the topics and technologies. The past couple of years, I've been really impressed with the digital asset space coming out of the Asia Pacific region. I think they've done some really interesting things like sharing credentials, sharing identity, sharing loyalty and rewards, using tokenization across ecosystems. It's been a big focus area there. I think in Europe, we've seen a lot of topics really around security and embedding compliance with AI. Seen a lot of interesting tools around investment solutions as well. That's coming out of the London region. And then in the US, it's definitely been AI has been all the rage almost inescapably. And it's everything from agentic solutions, security and compliance, what we call like next gen processing, which is like thinking about taking like really specific traditional processes and thinking if we can like reinvent them in a new way. So there's a company that's going to be in our program this year that's an agentic payments platform where they actually tokenize the identity of the AI agents and link them to the user of that, the human user of those tools, to then be able to struct payments on behalf of the user through the agents. And they're really, think about it like the plumbing and infrastructure of agentic payments and really radical. But I heard one of the financial institutions say, I think payments is the last thing to go agentic, is money movement. And so I think it's just another example of such a cool concept being talked about a lot, but the banks are pretty far off from actually going to market with some of these tools. And so it's going to be interesting to see how they're able to collaborate and at what point do they actually pick up traction to go to market on that.
That's super fascinating. It really is. I mean, it's amazing. I think agentic AI and agentic commerce using stablecoins, I think, is sort of that next frontier, that next big unlock. So the companies that are pushing there to build the plumbing, I think, are the ones that are going to succeed at the moment. Build picks and
Yeah,
shovels, isn't it? Yeah.
exactly. And I always like what I'm really interested lately is that convergence of these different technologies. Like I think it's such a fascinating, or if you think about it, blockchain, what it solves for is a data provenance, data transparency. With AI, that's the biggest problem. It is like, what's the provenance and traceability of this data? And stablecoins, I think, are just a perfect use case with the programmable nature of payments to actually be instructed by computer systems and AI agents. And so I think the convergence of this is going to be really interesting over the next couple of years.
Yeah. And I guess the other issue is that a lot of people are building the same thing in this space. So from the perspective of an incubator, you may get 50 clever people with 50 different projects, all wanting to get, into the incubator with a very similar thesis. How do you distinguish between who's the one that's going to be the successful? How do you place your money? Which bet do you take? What are the themes that come out? Because, there's so much brain power going into this space, building so many cool things. But I feel like sometimes it's a herd mentality. Sometimes all the brain power is being diverted to a certain theme, let's say project, open banking or AI or stablecoins, suddenly everyone's building the same thing. How do you pick out a winner in a very congested investment environment and project environment?
I mean, I think that is the question, right? If I had a good answer for it, I'd probably be off in the Bahamas and not on a podcast right now with all my investment money. But I mean, I think that is really like an ever-changing Rubik's Cube of what you need to get right. I think it's like a couple different dimensions. One, and probably my favorite, is like a really sharp team. Like just having a brilliant founder or executive team that can really explain its story, build a business, build a brand, build a network. I think that's probably the biggest piece is the people. I think the second is then the tech. Right. How is it built? How solid is it, et cetera? I think the third piece, though, is what's the use case you're going after? Is it the right time in the market? And we've seen a lot of companies that were too early or too late. And so there's a timing element to it, too. And then probably the last thing is just like a whole lot of luck. I think you might build a great company and then the Trump administration comes along and greenlights stablecoins, and then you need to pivot really quick. And so I think it's the timing aspect is really hard to pin down as well. But what's cool about the lab, Rami, and you're right, it is a bit of a herd mentality where you have these really great ideas that's really clear to the industry, and everybody goes and tries to build them as fast as they can. Especially in the AI space, I think there's always this looming thread of when is Anthropic just going to build that as well and offer that as a new tool. And so it's a bit of a race for who could build it first, build it best, build the user base, and then see where it goes. But what I think is interesting, and because of the lab, the evaluation actually happens by the banks. And so actually the executives and me, we sometimes chuckle. We're like, we really thought it was going to be this company, and the banks all really like that company. And I don't know why. It's sometimes they break the mold, but that feedback from the financial services sector, I think, really is a great validator to these companies. And our VCs really like that as well, because it's kind of the proof of that target market fit. And so the banks see things that we don't always.
And I guess you're in the perfect place, really, with London, New York, and Hong Kong. You're covering all of the major financial centers for this. So it's a very robust bar. So the feedback loop is probably very, very high quality, I guess.
Yeah, that's been the goal. I think there's a lot of other great incubators out there. We collaborate with a lot of them, like YC, Techstars, some of the academic incubators. But what we're really proud of is that we think of ourselves as, again, that graduate school, that more mature program. There's not a lot of other incubators that have got 40 plus financial institutions that are rolling up their sleeves, working with these startup companies and giving us that level of feedback. And so, again, to your point, we think we're really bringing the best of the bunch within financial services that are at that point in the market where they're looking to scale. And so you get a really great feedback loop from the banks as well around what's going well or what some of the challenges are.
When we first started talking, you had talked about one of the roles that you play is being on the advisory side, sort of on the advisory side to the larger financial institutions. So when you're talking to maybe the head of innovation at a certain bank or technology leaders, etc., there is some amount of education that you're probably doing and some kind of amount of feedback that you're getting on this is what is interesting to them. Quite often, if you put a leader on a panel, they'll use all the buzzwords, right? Like, what are you guys looking at? Oh, AI, stable coins, right? Post-quantum cryptography, like you name it, whatever is the flavor of the month, they will throw it out there. But what are you actually getting from them that keeps them up at night?
Yeah, that's a great question. And I'll admit, the lab is probably my most fun part about my job, but it's really only 20%. There's a really great team that runs it. So for me, like most of my work is the advisory consulting and partnerships with these large financial institutions, which I think is honestly for me really rewarding and probably the best part, because we're working on things of saying, okay, after the buzzwords, where does the rubber really meet the road? How do you actually embed and deploy these technologies as well? And I think what keeps you up at night is probably changes based on types of technologies themselves. In the AI space, a lot of it is, how do I redefine productivity? What does the future of work look like for my people? As AI takes over some of the manual tasks, how do I upskill those folks and reallocate them in different parts of the business so they can still be successful? And so I think some of the challenges is really around like the human aspect of adopting AI. Security is always a big concern as well. Um, how am I sharing data? What agents that being shared to? What's the hallucination threat of some of these tools and agents? There's actually a really fun company in the program that's going to be in this year. That is a data aggregation layer that sits between your existing data lakes and your AI agents, and they manage the sharing of data between like who has access to which information that's being fed through an AI agent. And the use case they've given me is your front office doesn't need all the same data as your back office and vice versa. And right now, we're deploying agents pretty agnostically across a business that have access to any data sets that are being fed into them. And so what this does is bifurcates who's got access to which data sets. And so I think that's like really interesting examples of executives that like, it's not so flashy, it's not so sexy, but for them, like those are really key questions to make sure that if they are deploying AI, it's being done in a pretty responsible manner. On the blockchain side of things, which is for probably the three of us more the most fun area. Like it's the technology is interesting, but it's actually hard to wrap your mind around, especially in a banking construct. And actually, I listened to your podcast with Tony McLaughlin from a couple of weeks ago, and I love Tony. I love what they're doing with the UBIX, and it's a great team over there. But it really changes, and he talked about this from an alien coming down, but it's a good example. But I think it really changes the way the financial services works, where you're going from this message and reconciliation based model that from all of human history, since the Medici's and the Crusades, where modern banking was sending messages across and updating your systems of account or records of account. And we're now moving to this shared token world where instead of updating your data sets, you're updating these shared tokens on a network. And so that really radically changes the way that we think about financial services. And so going back to answer your question, I think what keeps them up at night is less of what's the technology, what's the key management, like some of the more infrastructure questions. It's actually more like, how does this impact my business, right? Like, where do we play in the future of this if we're not part of that messaging layer or not part of that account management layer? Like, what does the future of finance really looks like, and what is the role that we play in that? And I think there's then questions around stablecoins. Is that going to be the new paradigm for deposits? And how am I now competing? And am I competing on yield generation? Because right now, interest on a savings account is 0.1%, and now yield bearing stablecoins are giving 3 to 4%, and so that really radically changes the incentive model for banks. So maybe a long-winded way to answer your question, but I think what we're seeing in the blockchain space is really like a shift in the thinking around how the business operates and actually works, and using technology as a way to differentiate or compete in that new paradigm.
Oh, that's super interesting. There's a lot to unpack. I need to ask a couple of questions before they jump out of my brain. How flexible are the new founders in understanding the mindset of the banks? So your earlier example before we jump to blockchain was how the company was able to switch between front office functions and back office functions for the data lake, which I think is really interesting. And from a bank, as a boring institution, that's really relevant. How much do the founders, the blockchain founders who are building cool stuff, think about that mindset and put themselves in the shoes of the financial institution? So that actually is quite important. I need to understand what that means. Or how do you shepherd them, maybe is a better question, to think about these things?
Yeah, and that's actually, I like the way you summed it up, because that really is the hypothesis of the FinTech Lab, is you've got these founders that really understand the technology deeply and might have like an early hypothesis for where the technology can be applied or the benefit that it gives. But after the 3 months, it's amazing to see how some of these founders really pivot, where they say, okay, actually, we thought we could solve for X, but after 3 months of working at this bank, we can actually solve for Y, Z, and Z. And so the lab's been pretty interesting in terms of how you can see these founders make that pivot and the light bulb moment for them when they realize that a technology can be applied in different ways across an organization. We had this company a couple of years ago called Reality Defender. Um, really fascinating, great founder. They've got that great combo that I mentioned earlier, but the founder's name is Ben Coleman. And what they do at Reality Defender is they're a real-time deepfake detection platform for audio, video, and text. And really interesting because as deepfakes are becoming more and more prevalent, they're able to identify and take down those threats in real time. And when they initially came in, they were embedding it into call centers because banks are high penetration targets for deepfakes, kind of call into the call centers and try to get a reimbursement or payment back. And recently I've been talking to their team about, hey, what if we can actually flip it around, kind of use deepfakes to actually do penetration testing against employees and their inside an organization to then help them understand like what these threats look like and understand how to take them down or how to respond to those threats. So using it more as a training tool as opposed to just a prevention layer tool. And so it's been pretty interesting where once they're inside of a bank, they're able to identify these new use cases and then make some of these pivots to find other ways to apply their technology inside of an organization.
That's
I love that
amazing.
idea because it's
Yeah.
we've all worked for financial institutions where you get that, that random spam email, right? It's a phishing email and you're supposed to report that it's a phishing email, right? You guys remember that? So you've
Yep.
taken that idea and like this puts it on steroids, right? Like it's much deeper. It's more than just a random email that's testing your whole organization on will they report a bad email or not from that perspective.
It's the gamekeeper turned poacher, isn't it?
Yeah.
It was pretty cool. And I remember seeing Reality Defender, by the way. Actually, it was at a conference in Chicago a few months back when I was on a panel with Tony from Ubix, and we had a presentation from Reality, and it was phenomenal. The quality of the output there was really good in terms of sort of the deepfake penetration testing and the services that they have. So yeah, it's definitely a growth area.
Yeah. And it's fun because that's where my kind of two worlds collide because Reality Defender came out of the lab. We fell in love with them as Accenture. Accenture does massive call center work for our clients. And so we've been using Reality Defender to embed them into our call center work across the globe to be that front line of defense against deepfake detection. So it's like one of those great success stories where you see them incubate inside the lab. You're able to watch how they're able to work with banks and then able to scale with them and use them as a partner over time. And so it's been really rewarding in the work.
A recent podcast I was listening to basically described AI or agents as not the end all solution for everything, but especially when it comes to agents, treat them like you would like an analyst in a bank, right? Like they've just started, right? They really don't understand the business. They're probably going to make a bunch of mistakes, but just try to limit the damage so the mistakes are not too bad, right? But then it kind of reminded me of at Bank of America, you have the public side and the private side, and both sides couldn't really talk to each other. And I feel like agents are going to go that route as well, where the same thing where certain agents that have access to certain data don't need to be talking to other agents that have access to other maybe more sensitive data. And I think that evolution is happening very quickly. One of the best quotes I heard from you, Luke, in a different podcast, I believe, is you said, AI built on bad data is just bad AI. And I completely 100% agree with you on this. If you combine this concept of AI, deepfakes, and maybe things like decentralized IDs that are coming up on chain, are you seeing startups in that space? Are you seeing financial institutions ask for solutions like this?
Yeah, it's a good question. You brought up the blockchain point. There's a company that I really fell in love with that didn't. I'm trying to get them to apply to the lab. Hopefully, we get them in. But they're called
this podcast is going to push them to do it. Don't worry.
Yeah, good. If you're out there, but they're called the Graphene Node, and what they actually solve for, and it's been talked about a lot over the previous years with blockchain, but I think they could really do it this time because what they are is a marketplace for data where they actually tokenize the data itself and everything's shared over the blockchain. And then the reward system for sharing that data happens with stablecoins as well. And so when you think about, let's say you're John Deere, and John Deere makes a lot of data off of their tractors that are actually scanning like the crops in real time, and they sell that data to financial markets to then have like commodities and derivatives. Like a lot of trading happens around the data that John Deere gets. And for John Deere, like they monetize that data very well. And so if you're going to feed that into AI models, as a user, I only maybe want a couple pieces of that information to fill up my report. I don't want to pay for the whole data set associated with that. And so what this company does called the Graphene Node is they will actually do the data sharing for those AI systems to those data sets based on blockchain, where you can actually track the provenance and then pay at a fractional level down by what data you're actually pulling from those data sets. And so I think it gets after what you're mentioning, Luther, around the data sharing, the confidence of that data. How are you able to train them over time and have more confidence in the data sets that you're using? So I think there's like some fun examples out there on how do you have more confidence in that data as you're building these up. But the other thing that you mentioned is like training them like an analyst. I think that's how you're going to see this being played out. I think it then is going to change the human aspect of businesses. We've been talking a lot of, it used to be talked about as like a pyramid construct where you had a few leaders at the top and you have, kind of medium level middle management and a wide level of analysts that are across the bottom. We've been talking a lot about lately as a more like a diamond model. We still have those leaders at the top, a pretty wide middle management layer, but then only a few analysts at the bottom that are then being enabled by AI. And so I think you're going to see that happening more and more, where you're going to have more lean systems where your junior talent is supported by AI systems, elevates them up to be more managing across agents or analysts before then moving up into leadership levels. And so I think it's going to really change the way that we think about traditional structures for organizations as well.
Wow, that's really interesting because, ultimately that's the existential threat of the new graduates that are coming out of university now because, how do you're competing effectively with AI for your entry level jobs, and then how do you get the training to get in, to then be able to start to successfully climb that ladder. So, but I do agree with you. I think that's a really good thing from the pyramid through to the diamond makes a lot of sense. Yeah, has big implications. Yeah.
Definitely big implications. And it's interesting, when I came into consulting out of college, the way you learn is by doing like the actual research yourself and taking notes on calls and writing the prompts for your leadership. And like you're really spending most of your time soaking up and learning information. And nowadays, the analysts, it's all ChatGPT of what they're pulling from. And so I think it's similar like when you were a kid and, I remember being in math class and they're teaching you math. I'm like, why am I learning this? Because I could just use a calculator, right? And I think it's important to understand the rules and how it works to then be able to use a calculator more effectively. And I think it's similar in the AI world, especially for young people, of knowing what good looks like, knowing what like real results are, what is like a rich insight, not just what ChatGPT spit out. And so I think we're still trying to push our analysts to like learn the old fashioned way while being enabled by AI tools.
Yeah, it must be that way because, ultimately you're not going to be able to spot the mistakes that AI it comes to you or spits out unless you actually have the subject matter knowledge. So yeah, I think that's the only way it can work, to be honest.
We didn't really touch base on either quantum cryptography or quantum computing in general, or post-quantum cryptography, which keeps some of us up at night, right? When we think about what we work on a day-to-day basis. What are you hearing from leaders in the financial institutions around quantum computing?
Yeah, admittedly, it's exactly that. That's keeping people up at night. I think for most people, when I look at quantum, I think it's a rational approach. I think it's still a number of years off.
Yeah.
I think just from a hardware perspective, it's too much energy consumption in terms of keeping the computers at that temperature to really have quantum computing be commercially viable. So I think it's still pretty far off. But we are hearing some interest of saying, or there's a fear of that ChatGPT moment happening for quantum, where ChatGPT came out and it was a starting gun for the whole AI boom that we've had over the past couple of years. And there's a fear that there's going to be a new breakthrough and all of a sudden everyone's off to the races trying to get up to speed on the quantum space. So I think it's still early, but we're hearing a lot of interest in the topic of quantum because of that fear of when is it going to hit and am I protected if it does hit? And so some of the interesting companies that we're looking at in the quantum space are actually focused on identifying or looking at an organization or enterprise and identifying what are the potential attack vectors that quantum will actually make an impact on. And so looking at, what are your traditional security measures? If there was quantum, what's at risk? And give you a mitigation plan where, okay, if quantum does accelerate, how can you accelerate with it to make sure that you're prepared and secure against that? And so I think that's where we're seeing most of the interest right now is really on quantum threat preventions, or at least threat identification. We are seeing also some interest on like accelerated data processing, especially for like investments or accelerated trading. but I think that's still a little early in the days of quantum to be viable on that. I think there's probably earlier accelerated data processing tools that'll be there before quantum that are going to help on the data processing side of things.
Something that we don't often hear a lot about, or I'm maybe just ignorant about, is the overlap of quantum and AI. What are you seeing in that space or that overlap, Luke?
Yeah, it's a strong overlap. If you think about the LLMs that are sifting through large data sets to derive as an answer, I think quantum gives you the ability to process that even faster. And so I think it's going to be another match made in heaven. And like we talked about that convergence earlier, I think
Yeah.
distributed ledger and blockchain, AI, accelerated data processing like quantum is going to be the direction that technology and innovation is going to continue to move in. I think we've seen in the past couple of years more siloed experimentation across each of those. And I think what can be truly radical is how these can converge more and more. So I think that's where the puck is going. I think for AI, especially the ability to have more uniqueness in the results that you get back, I think quantum's going to be really impactful towards that.
You're right. That Venn diagram of those three circles, quantum, AI, and let's say blockchain, that overlapping is a very strong, and it's one of those things it's like staring into the sun, right? Be careful what you do, right? But I think it's going to be a very strong overlap from that perspective, and I don't think we're too far off, with quantum being probably the slowest part of the evolution on that side, right? Because we already have some of the other pieces in place today from an AI perspective, and definitely from a blockchain perspective. And even every blockchain evolution, right? Look where we've come from. Bitcoin having very low transactions per second. Bitcoin was a transactions per minute, to now where we are with Solana with like 60,000 TPS, etc. Right? So the evolution is very strong. As we start to kind of wrap up here, would like to get your perspective from a slightly 60,000 foot level, right? Like on the blockchain side, and more so on the stablecoin yield side that you talked about earlier. What are your thoughts on this? Like Rami and I have always talked about this as, in order to have true adoption being not just transactions, but actually people holding on to stablecoins. Yield is something that should be associated with a stablecoin, but we can see quite a bit of friction there from the banks, and rightfully so. I understand what their piece is, but would love to get your thoughts on this.
So my immediate reaction is I think the banks have been pushing back against innovation in the technology space for a number of years now. I think there's a concentrated effort with Choke Point 2.0 that we saw. I think you're still having banks pushing back into Genius Act. My inclination is that the banks are buying themselves time, that they know the technology is going in this direction, and the pushback is just until the point that they can get ahead of this. We're seeing more and more banks that are building custody solutions, looking to tokenize deposits, looking to stablecoins, tokenize money market funds. And so I think publicly they're talking about how they want to push back against yield, and it's going to be a nail in the coffin against the banking industry. But I think privately, they're trying to get ahead of this space. They're building solutions. They're going to be competing in this space as well. So I think that's the reality of it. I think yield is inevitable, and I think it's pretty important to adoption. If the US is not doing it, you'll have it overseas. And the transferable nature of these tokens gives you the ability to move between a US non-bearing stablecoin, which you could use for liquid payments, into a yield-bearing, maybe Hong Kong-based or Singapore-based stablecoin that is giving you yield. And so I think we're going to have to compete on a global stage. And I think the new administration understands that and is driving in that direction. And I think the banks and their pushback is really to buy themselves time because they understand that the world's going that direction as well.
Yeah. I mean, the first yield-bearing stablecoin, if I remember correctly, almost 3 or 4 years ago, was launched out of Singapore, right? By, I believe, Paxos, right, Rami?
I think it's Paxos, yeah.
Yep.
Lyft, right?
Yeah, absolutely.
Out of Abu Dhabi, actually.
Yeah.
Oh, there you go. Okay.
Quick plug for Abu Dhabi. Thank you, Rami. That's where Rami lives. By the way, ADGM is a great regulator. We're a huge fan.
It's a great regulator.
Yeah. Two different questions for you. When other startups listen to this podcast, what is some advice you would give them? That overlap that you talked about, right? Like it's got to be a great team good technology. Luck they can't control, but
Yeah.
I think there's a fourth thing that my friend Jamal had mentioned recently to me, which is the narrative, right? You got to have a great narrative as well around it. So if you kind of think about those kind of four things, luck being out of control for all of us,
Yeah.
unfortunately, what is some advice you'd give some startups?
Mm. I think you're touching on it, and I think we've part of it is what we're talking about on this call. I think as a founder, like staying really on top of the trends that are coming out, being well rounded to understand the innovation that's happening in the blockchain space, the AI space, quantum space, and like being able to think about those trends nimbly in a way that you could pull into your business. It's it's funny to me every so often I'll talk to an AI company founder. I'm like, oh, what do you think about stablecoins? They're like, I don't really know much about it. I'll talk to someone in the blockchain space. I'm like, oh, what do you know about AI? They're like, it's not too relevant to us. And I think that's not the right mentality. I think as we think about this convergence and as a founder, being very nimble in a way that you can adopt new technologies, embed them into your technology stack, and then move from there. I love what Stripe's been doing lately. I think they've been making huge strides in the blockchain space. And now they're all over AI too, talking about agentic payments. So I think it's this what we call like a string of pearls where they're start with the really great innovation and then slowly add on, you know, digital currencies, digital assets, tokenization, accelerated payments, card processing, and like slowly start to bring in these other solution sets to be a really well-rounded business as you scale. And so I think for any founder out there, like staying on top of the trends, thinking about this and telling that narrative and that story in part of your business, and not just in terms of what is the technology, but what is the solution or the vision that you're selling in an organization.
If we flip that narrative around to leaders from large financial institutions, etc., who maybe haven't really partnered or thought about partnering with a lab like yourself, like what should they be thinking about?
Mm. It's funny on the other side. I talk to financial institution executives that say, we can just build it ourselves, right? Let's throw more money at it and we can compete with what anything the startups are doing. And I think that's also like short-sighted or handcuffs themselves. There's some really brilliant founders out there. And I think if you want to move fast, and the world is moving so fast with innovation right now, it's hard to keep up. And I think one of the best ways to stay on top of it is working with young founders, understanding their innovation ideas, bringing that into your business, both in terms of a mindset change of how to work with young, innovative, smart founders that are really trying to crack the code of some of these big problems. But then also kind of coming to the table and leaning in a meaningful way where you're able to give that exposure, funding. Like what you do have is the exposure, the funding scale that you can give to a founder to really turbocharge them in their business. And so I think it's coming to the table to engage meaningfully and helping those founders be successful.
Amazing. Amazing. Where can people find you, Luke?
I'm mostly on LinkedIn and I'm based in New York. So if you ever want to talk about the FinTech Lab, come hit me up, and happy to have you guys come in and check out some of the companies.
Fantastic. It was a pleasure having you.
Luther, Rami, thanks so much.
If you're building stablecoin infrastructure, this episode makes clear that adoption bottleneck isn't regulatory, it's organizational. The institutions that will win the next decade of payments are the ones building now, and the people who understand what that actually takes are sitting in rooms with people like Luke. If you like this episode, definitely please share with a friend and like and subscribe for future episodes. See you on the next one.